now for commodities market update, let's take a look at what's happening in the oil market. We see Brent crude gained about $1.80 to $99.86 a barrel after falling 3 consecutive trading sessions. And the U.S. West Texas Intermediate crude futures was up about $1.60 to trade at $96.67 cents a barrel. All right, now we have Dumebi Yeke, financial analyst at Financial Derivatives Company, joining us now to break it all down. Good morning, Dumebi. Wow, below $100. Well, I guess a pullback was, somewhat expected. Yeah. How are you seeing the market?
Well, the oil markets, like as usual, are always ruled by a lot of sentiment. But currently, there are a few things happening in the market, and that's because the first one is the fact that OPEC is quite skeptic on its outlook for global oil demand. And you remember that they were quite optimistic about the outlook for 2022, expecting that global oil demand would, increase by 4.15 million barrels per day. But clearly, with the resurgence of COVID cases in China, a major importing country, or the largest importing country of crude oil, and the fact that the Russian-Ukraine war is still lingering, so that has provided a pretty grim outlook for oil demand, for their oil demand forecast. And so the short-term oil demand outlook is looking pretty slow. And then also look at what's happening on the supply side as well. There are some things that have gone on. Number one, Saudi Arabia is planning to sell some oil to China, pricing it in the yuan, not in dollars.
Wow.
So and currently China already buys more than 25% of Saudi Arabia's oil, and Saudi Arabia is the largest largest crude oil exporting country, and China the largest oil importing country. So this almost, poses some level of threat to the U.S. dollar's dominance in the global oil market space. That, alongside the fact that there's continuing talks on the U.S. Iran nuclear deal, the easing of the Venezuelan oil production restrictions, and the fact that OPEC could increase, supply to somewhat prop up, could increase supply to somewhat taper global inflationary pressures as well. So all of these things put together are making the bears, have some level of good time in the oil market.
I guess the shorters are having fun
yes.
Right now. All right, talking about inflation, data for February is out and rose by 15.7% here in Nigeria. Everyone's fighting inflation globally. How do you see the data for Nigeria?
Yeah, the fact that it rose both month on month and on the annual basis clearly points to the fact that what's happening in the domestic economy, or what's happening in the domestic markets, is being reflected in the official data. We expect that the figures for March could even come in higher, and that's because we're feeling the major heat of the increase in diesel prices, the increase in the price of rice, the increase in the price of PMS, the fuel scarcity, all of that. We're feeling the brunt of it more in March. But the February numbers clearly point to some level of distortion, in the economy, especially when it comes to commodity prices. And the trickle-down effect is from the global economy down to the domestic economy, especially when we look at energy costs. So first of all, we're looking at the fact the price of diesel now has skyrocketed to about like 800 naira per litre in some parts of the country. Some other parts we're seeing it at 700. And remember that a lot of companies run on diesel. A lot of businesses run on diesel. The food trucks the trucks that distribute food across the country run on diesel. Some of the farms run on diesel. Most of the
bakers just spoke now.
Exactly. So the multiplier effect of this is that, number one, operating costs are going to continue to increase. The price of these commodities that we depend on, in terms of staples, in terms of energy, in terms of telco services, all of these things could increase further, and this would, further increase inflation. And not only that, it would also affect the consumers, because when prices increase this way, manufacturers or producers are somewhat forced to, pass the burden to the consumers. Even if they would like to shelve some, they would not take it all. Consumers would have to, bear some of the brunt of this. And remember that food inflation for the February numbers, it declined marginally, and that's what. And the major reason for that is the fact that consumer demand was weak. There was some level of price resistance, to the increase in commodities. So people didn't exactly demand as much. Typically January, it's a slow month coming after, the festive season blues. And then when you go into February, you see that there's some level of uptick in demand and all of that. But we didn't see that this time around. And that's to show that consumers are really, really squeezed because income levels are not increasing. And with this loop continuing, the expectation is that, this loop is going to definitely continue. And the expectation is that the economy will continue to be squeezed this way.
Quite interesting. Rising inflation, rising prices, but low demand.
Yes.
Quite an interesting one. But talking about, you see the U.S. Fed, they've increased the rates first time in so long, about 25 basis points. Quite interesting. How's this going to impact, emerging economies?
Of course, this has a very direct impact on emerging economies. So let's start with the fact that the U.S. Fed is taking like a softish land approach when it comes to the increase in interest rates. Now, although they've said they're going to be aggressive, analysts are saying that they're still going to take somewhat of a soft landing approach because the impact on the economy could be quite harsh, especially with the fact that energy prices are still high. And remember that there were entering the election year, for the U.S. as well. So Biden's administration is definitely going to try to keep things, at a very considerable level for everyone, so that the economy continues to run smoothly. Now, moving to the impact on emerging markets. First of all, when interest rates increase, emerging markets receive the brunt in terms of higher borrowing costs. So countries that borrow, this simply means that their cost of their external debt is going to increase. Now let's bring this home to Nigeria. Nigeria already has an extremely high debt level profile. Debt servicing costs, are already very high. Debt servicing costs, debt service to revenue ratio is already over 80%, and this is going to, definitely increase. But another thing that this could point towards is that it could encourage or somewhat hint the CBN or the MPC rather to increase interest rates at the upcoming meeting.
It's already high though. Double digits.
Yeah, so no, it's going to, first of all, when there's an increase in interest rates this way, for the CBN now, the MPC I'm talking about, if they increase interest rates, it's somewhat keeps investors within the economy. So because with the US Fed increasing interest rates, what this means is that the rates on fixed income securities within their markets would increase, and investors would likely divest, from emerging markets to this economy. So this has an impact on your forex, on the forex level. It has an impact on the currency. It has an impact on the stock market activities. It has an impact on borrowing costs. It has an impact on debt levels. It has an impact on debt service costs as well. And remember that Nigeria currently is revenue strapped. On the news, saw that the finance minister, they're planning to take some cash from the Eurobond sale that already happened, I think last year, last year. So they're planning to take about $2.2 billion from that for fuel subsidies. Right. And unfortunately, putting this money in fuel subsidies, not even in ramping up refinery activities, it's almost as though you're putting money in a recurrent expenditure, because fuel subsidies don't bring you it doesn't help you generate any revenue. So we're spending more, pushing more money into the economy, spending more dollars, increasing our debt level, increasing our debt servicing costs without any commensurate increase in revenue. So with that happening, obviously continues to keep the federal government revenue strain, increases our budget deficit, worsens our fiscal position. So there are lots of things happening, a lot of things that could happen or that will happen with the fact that the U.S. Fed has increased interest rates. And those are just a few.
The naira, the parallel market trading for about 582.
Yes.
To a dollar. That's quite interesting. And I've seen the import cover. I see the stands at about 9.01 months. Should we be worried?
I mean, it's definitely something that we have to raise our eyebrows to, because it's not really an encouraging situation, especially with the fact that the global economy is not exactly stable. And the global economy is not exactly stable. Remember that Nigeria is basically at the center of it all. And when I mean center, I don't mean center like we're enjoying the situation. Yeah. We're at the center of all the jabs. If oil prices are too high because we're net importers of crude petroleum, refined petroleum products, we're feeling the brunt of this in our revenue and our expenditure. The fact that the US Fed has increased rates, we're also going to have some level of, shock from there. So clearly, the Naira is taking a hit, and that's because we're not receiving any significant increase in revenue. And remember that Nigeria is more sensitive to changes in oil production than prices, and our oil production level has remained significantly low compared to the OPEC quota. Nigeria still produces on average about like 1.3 million barrels per day, compared to the OPEC quota of about 1.7. So that's significantly low. So we're not even producing as much to meet up with our domestic demand and our revenue obligations. And the more revenue strapped we are, the more impact this would have on the currency. Right. And remember that forex demand is increasing. Businesses have to run. Manufacturers will definitely need forex to import raw materials. And people need to fly out of the country. People need to fly into the country. So so international travel agencies need to repatriate funds. So the need for forex is extremely high. The CBN is definitely continue rationing in a bid to service demand in the little way it can. But the truth is, not until there is a significant and consistent increase in forex supply at the official window that can significantly meet demand, exactly. This currency swings will definitely continue.
Exactly. All right, let's look at some commodities now. See, cocoa, there's a shortage of cocoa, and some are actually hoarding cocoa beans at this point. What's happening? Yeah,
so what happened was that because of the flooding and increased rainfall that happened during the main crop harvest in September, some marketers decided to hoard, which is pretty typical. I mean, we also see that happen with PMS a lot of times, and where we see there's an artificial scarcity in a bid to just increase price, and then they're able to make more. And this is because they're speculating that their output is going to be low and demand is going to surge. So they need to just make up for the fact that within a particular period they're not going to be able to sell. So right now that's exactly what happened, and this has been going on for a few months. And so currently there's really a shortage of cocoa. I mean, in Oyo State, according to the report, there is no cocoa to sell, meaning and there's no cocoa to sell, so they don't even have a price for cocoa right now. And with that, I remember that cocoa is one of Nigeria's major traded agricultural products, and it provides, definitely a substantial increase to our export earnings. And if this is happening, it means that number one, the increase in cocoa prices globally, Nigeria cannot take advantage of it because we can't even meet our domestic demand. How much more export? That's
another commodity.
Yes. And then so currently marketers are waiting for the mid-crop harvest, which could likely start early next month before anything could happen. I remember there's a long gestation period for cocoa, so before they plant, before the harvest and all of that. So it's just going to take a while before Nigeria could even recuperate any funds.
Quite interesting times maybe for commodities. It's like the year of commodities.
Exactly.
2022. Thank you so much. Maybe always great to have you on the program. Maybe analyst, financial derivatives company.
Thank you so much.